It's Edward. Edward, and now your surname, Nwokedi. I hope I got it right, or else you have to correct me. And Ed, he's the founder and CEO of RedSwan. And Ed will speak of his experience in the field of some of the projects that RedSwan has already completed. So Ed, the screen is yours. Please take it. Yeah.
Yeah. Good morning. And
good morning, Ed.
Jacob, thank you very much for the introduction. And it's a pleasure to be speaking behind Klaus and Graham because those guys are so smart about the industry and really great to work with. But I'll tell you right now, I'm not a technician. I'm not a technical guy at all. I'm more of an entrepreneur, a serial entrepreneur, and I look at this from the business standpoint. So my name's Nwokedi. I'm the CEO, founder of RedSwan CRE. We started this company back in 2018. We saw a strong demand for change in the capital markets industry for commercial real estate. My experience background is, goes beyond real estate. I've been a serial entrepreneur for a long time. Age of 12, had a paper out. By age 14, I expanded it fourfold to have 4 times revenue, and that kind of got me hooked on business. After going to school and getting my MBA, I joined, I started a company myself in the automotive industry, grew that to about 7 locations in the Northern California marketplace, and then sold that business off and then moved into technology. We then had a venture-backed company called carstation.com that raised about $95 million. And we took that company to the point where we sold it to a Fortune 500 company. So I've been enamored by business for a long time and also technology. After coming into the state of Texas and getting into real estate, I worked with Colliers International as a real estate executive, and then with Cushman & Wakefield as the executive director for the capital markets industry, focusing on multifamily. So in that business, I was able to work with a lot of business owners, real estate owners, and as an advisor, my primary role was to help business owners and building owners to generate profit, also to guide investors in what types of real estate they should invest in that would actually bring them a profit, which sometimes is not easy to do. I did that for many years, over 18 years at Cushman & Wakefield, and really enjoyed that experience. And we had many billions of dollars worth of transactions that we successfully made. And this is really focusing on the mid-sized to large investors. So I had a really good opportunity to talk to smaller investors that have 10 million or less in their pocket to invest in apartments, but also major institutions that were investing $500 million in that kind of denomination. It started to get to exciting for a long time, but it started to become a little bit monotonous when we started to see that a lot of the smaller investors were struggling to find good yield, especially as the years accumulated. We got down to the 2017, 2018. In those years, you saw cap rates really compressed, and it was really difficult for investors to find properties that are going to give them a very decent yield. And what I started to notice is that dwindled out a lot of the smaller players. And we were starting to take assignments that are $100 million assignments, $80 million assignments. We basically made 5 to 10 phone calls to the major institutions, and they would be able to gobble those properties up very quickly. So it really left out a lot of the smaller investors or mid-sized investors because they need a decent yield in order to get into the game. When you're buying something at a 4% cap rate, as they are today, your chances on success are very thin unless you have very deep pockets. Buying an apartment building at a 4% cap rate, and for some reason you lose occupancy, maybe 5 or 10% occupancy, your whole profit is wiped out. And if that's wiped out for a period of a year or so, your equity is totally wiped out. And if you're looking at, fast forward today when we're dealing with the pandemic, you'll see that not just not apartments, but in other factors of the industry like hotels and in retail and office, a lot of equity is wiped out. So people are now working with their banks and trying to hold on to those assets so they don't get foreclosed upon. So it's a very challenging industry. It's not for the faint of heart or people who are not sure what they're doing. You're careful about how you spend your money. So this really led me to look at blockchain technology. Back in 2018, I was prodded by one of my former partners in the previous tech company I was in to go to a blockchain conference in Dallas. And I didn't want to do it because I was so busy having so much fun, but I decided to take his word for it and go to this conference, and it really opened my eyes into what was happening with this technology. I didn't see it as Bitcoin. I didn't see this cryptocurrency. I was looking at the technology and how that can actually affect our industry from a capital market standpoint. It got really excited about it because I realized it can make some significant change. The only thing that was holding back was the regulations from the SEC. And once they came out with a mandate that was canceling out ICOs and pushing for security token offerings, that was it for me. I realized that was the turning point in which I kind of resigned from my position as executive director and went 100% into founding RedSwan and building RedSwan. And I took a different approach because I didn't have a lot of technical experience. My approach was to talk to building owners and also investors, but mostly building owners, because I can see the problems they have in the industry. A lot of these owners have a lot of, they're asset rich and cash poor. So, when a downturn or something happens, they can't pull a lot of their equity out of their properties. So you look at any $100 million property, there's probably a $50 to $60 million debt note on top of that property. And then there's, the balance is their equity. But that equity can't be recapitalized out. The only way they can usually get their equity is to call me up as a broker and ask me to sell their property for the highest price, so that now they can get full value for the asset, pull their equity out, pay off the loan, pay off their sponsors, equity investors, and take their profit. That works, and they continue to do that year after year after year, or I should say cycle after cycle. But having 40% of equities trapped in the property is limiting, because you are forced now to sell at times when you don't want to sell. The more successful business owners or real estate owners that I know are the ones that continue to buy. They continue to capitalize and buy. They never sell. They refinance. They keep holding it. They keep raising or improving the property with value add, and their assets under management becomes in the billions. Those are the very successful real estate owners. The ones that have to buy and then fix up a property, they're kind of flipping short term, buy it, upgrade it, sell it in 3 years, and then try to find another asset to buy. That story becomes kind of difficult, because the more every time you sell, you have to go back to the market to buy. The pricing is higher, the yield is lower. So your promise to your equity investors gets more and more risky as time goes on. And so that's a major, major problem. Also, from the real estate ownership standpoint, just trying to recapitalize properties over and over again, having to go out and try to raise money from friends and family or from capital equity institutions becomes challenging for them, and therefore you see them having a hard time with acquisitions. And then on the investor side, it's also challenging. Investors, like I said, they don't get the access to the quality deals. They get the smaller investors, and when I say small, I'm saying $20 million or less for the capital to buy. The access they get to quality to properties are mostly the B and C value add properties that are harder to manage, that need work to be fixed up, that have risk. There's higher reward, because if they're able to do a good job and raise the value of the rents, they can get a better IRR on that asset. But the risk factor is also very hard. I mean, sometimes you buy an asset, you won't know if the plumbing situation is bad. It can burst on you, and you have to put in a whole new plumbing system to wipe all your profit. So I found that the the smaller investors were having a hard time, finding quality assets, and they needed better access. And with blockchain and using tokenization, we realized that we can solve a lot of those problems. We can now take an asset and let a property owner tokenize his property and sell down his equity shares. So when you look at, like I said, the value of an asset is the overall value minus the bank debt that's on it is probably the 35 or 40% left as their equity. Well, rather than sell off that 35 or 40% equity, be totally out of that asset, and then you'll have to hunt for another asset at a higher price, they can now sell down 80 to 90% of that equity and put that in their pocket, and then still be able to have a GP management issue in the property and be able to collect waterfall profits down the road while also collecting management fees. That's a much more lucrative position for a property owner than to continue to flip the property and debalance and have to start all over again. So, blockchain helps property owners in that fashion. It also helps the investors so they have that liquidity. It's the reason why a lot of people with capital don't put all their money into real estate is because the hold period is very long. 3, 5, 7, even 10-year hold periods. You have to trust your money is going to be safe in an asset, in one asset. And the chances of that asset doing well are fair to medium, but it could also go bad very quickly. So having your money tied up in an asset for a period of time, even knowing when the market signs don't look too promising, like right now we're in the middle of a pandemic, and you know that the signs of holding on real estate may be dangerous in terms of your equity, there's no liquidity for you. So with the blockchain, it does create that liquidity prospect where people can now sell their equity interest by posting it and putting it on an exchange or allowing the broader market to know that their shares are available for sale. So I like all those aspects about the business. And like I said, my main goal as being a advisor in commercial real estate is to help people make money, both on the property owner side as well as on the investor side. So when I started working with Graham and Klaus in tokenization, I get really excited about the opportunities that we can help investors in terms of giving them more diversification on their investments, giving them a lower cost of entry on the investment, and also give them, like Graham has shown, the type of properties we're going after are very high-end Class A properties that you don't see many private investors in. They're mostly the capital stack is usually the major companies like Starwood or KKR or major companies like that are the capital stack. We're writing those $80 million checks to become part owners of that equity. Well, I think by letting smaller investors come in, they now are be able to, like Graham said, diversify their interests, put $10,000 into one property, build a portfolio of assets that are all Class A in major cities, know exactly what you want, and then also know that you can get out if you change your mind. People say, well, you could just buy into a REIT, but REITs are not the same. You're buying the bathwater. You don't know all the assets that the REIT manager is putting into it. Usually there's a large entrance fee, what they call load fee, coming to these REITs. And then the liquidity on the REITs are not always liquid. As you know, when we just get into this pandemic, you saw that some of the guardrails for exiting REITs or exiting some of these funds went up, saying because of the uncertainty of where the market is right now, we're going to postpone dispositions on some of your positions. So the liquidity is not always guaranteed. But if you look at it from the standpoint of a true marketplace, like you see on eBay or like you see online, once you post something for sale and you now have thousands, if not millions of people looking at it, they're going to give you their best bid if they're interested in it. And I think that's the real sign of market liquidity. So we've been working very hard at RedSwan, our team. I'm very proud of our team because we focus on the business needs of property owners to go out and talk to property owners who are looking for new ways to generate capital, looking for cheaper capital than what they're seeing right now. And we were able to initially put together $2.5 billion worth of properties that we're tokenizing, and we now have a pipeline of another $1 billion worth of properties that we're going through the process of tokenizing. That's telling us that there's a strong demand for a change in the way deals are being capitalized. And although we haven't started selling the shares yet, we're doing that this month. We feel very comfortable that there's demand for not only the investors who want to buy, but also the property owners who need capital, especially in times like we have today, where this COVID pandemic has really impacted a major part of the industry. And if their equity is wiped out, and the bank is now just holding on to the property and letting them be caretakers of the property, they're going to need capital to either repurpose that asset to make it more valuable, or buy it back from the bank, because they're going to need capital. Otherwise, they're going to fold, and the bank is going to have to try to figure out a way to repurpose that asset. So capital is going to be very important, and not just from the major institutions, but we need to put the capital in the hands of average investors so they can make good decisions with their capital. So, we're really excited about what's going on there. I wanted to make sure this is kind of an open dialogue. I didn't bring a PowerPoint presentation because this is really not, I know that Graham and Klaus would have that point covered on the technical standpoint, but I was hoping that if there's any questions people have in terms of what's really happening in the industry, the adoption rate we're seeing, we think is especially in the past year with the pandemic, I keep bringing that because I think that's really turned a lot of heads in terms of the adoption of the blockchain technology in real estate. People are looking for new ways to refinance their projects, and they're calling every day for us to analyze their assets and see how much it will cost to tokenize their project, how long it will take to raise the capital for their project. We're talking to banks. You can even tokenize on the debt side. You think about that. Where this DeFi is going to change the way the financial institutions are operating on the debt side, because now you can issue debt for property and then tokenize the debt, and now have smaller investors come in for a lesser piece of the yield, but still, they take away a lot of the risks that the banks are putting out there, and they still have the collateral on the asset. So I'm fascinated by what's happening in the business, and we're into this 150% of our time and effort is going into tokenization because we think it's definitely the right thing to do.
Thank you very much, Ed. I think it was really good to have this not so technical part, but from the real world there, from the real estate investors and owners. I think really interesting perspective. I have a question. I know the real estate world as well, and it's in my view, it's often quite conservative, and sometimes they're quite afraid of new technologies. Don't you meet, worries about this new technology when you go out and meet like traditional real estate owners? And what are their worries about this? What are the questions they put to you about tokenization?
Well, a lot of the owners just weren't paying attention before because they thought it was kind of a fad. They thought it was related to Bitcoin and currencies. They didn't see how it was going to affect real estate. They're now very eyes wide open and paying attention to what's going on because Bitcoin and cryptocurrencies has changed the landscape of capital. It's now a new structure of capital coming into the marketplace. You think about these coins are being developed in, for example, Libra coming out with a coin. If Facebook comes out of a coin, and they have over 3 billion users who adopted that coin, that's larger than the GDP of our country, not to mention many countries put together. But just looking at where crypto is right now, we've got about $380 billion worth of crypto out there, right? And these people already understand blockchain. They already understand the marketplace. So we're now telling owners that you can't ignore this pool of money. These cryptocurrencies are going up in value, and billionaires and millionaires are being made every day, and they need to place their money into assets. They don't want to continue having their money in volatile assets. They want to try to move some of that money into more stable, conservative assets. And when you think about real estate as a hedge against crypto, there's some really great strategies that crypto owners could actually use to start merging into commercial real estate. But it provides competition which provides better pricing for business owners, building owners to recapitalize their assets.
Thank you. That's just another question here for you. How are you managing the process of asset custody and secondary market liquidity?
Well, we have good partners. So that's the real question for us. The answer for us, for custody, we have a partnership with Coinbase. So they're our custody provider. They're the largest custody provider for cryptocurrency in the world. They're also now providing custody for digital assets. So we're parking our $2.5 billion in real estate with Coinbase to hold on to as we issue to investors. And once the investors buy, they're still parked with Coinbase so that they have that security of not losing their assets, always be able to access their holdings and their dashboard by just tapping a couple buttons on their cell phone. So custody is, I think, something we've already solved. And also for secondary trading, we have processes. We're working with groups that are providing the technology for secondary trading, for the market matching capability, and also with transfer agents that are actually letting us have that liquidity. I think that the larger population of product we have in the marketplace, the larger the demand will be for liquidity, and the larger amount of activity will start trading. I'm helping to create that population of supply in the industry. I think it's very important to bring billions of dollars worth of real estate into the blockchain, which will start creating more activity. It has to start somewhere, and that's why we look at. We're very honored to be able to start that process. And the liquidity process is people want to sell. I watch people call me up to sell every other day. I watch investors call me and say they want to get out of an asset LP investment they can't get out of, and so now they'll have an option in which they can get out. And I think that's going to be